Hi friends, let's take a look at Ethereum, shall we? Yes, we shall. Okay, let's do it. Ha. Zooming in here to the prices, let me just get rid of the oscillators for now. Bearing in mind that we have a high which is higher than these highs over here, and therefore is convergent in that respect. The high is lower than this high over here, so it's convergent in that respect as well. Apart from the stochastics where we see bearish divergence. Yeah, so the stochastics is showing us bearish divergence between these 2 points, talking 12th of October to sort of mid-September area. Okay, getting rid of the oscillators there, and in fact all of the drawings, just to look at where we are structurally speaking. We're still not managing to take out this high. Oh, well, in that case, let me bring this back up again. This, of course, is not divergent. Take that back. But what we're seeing here then instead would be hidden bearish divergence very much appearing. This is okay. So it's glad we did that analysis in that way. There you go. Hidden bearish divergence here because of the lack of being able to follow through and take out, what did we call it? Yeah, 390s. We spoke about this at the time, obviously, and the run up to it, how important it was to take out 390. There you go. There's a good reason for it. If we see the prices sink back down again, you could expect for them to come back down and retest these zones at the 340s area. Reconfiguring this Fibonacci here so that we've got it lined up appropriately. Let's take it from this low over here. What's that again? The 5th of September up to the highs that we've had. So that doesn't really make sense. We need to tie in with those other highs because we didn't take them out. Well, the 236 in there at 373 is obviously important. Let's line this up though with the previous swing low then instead, and our high in here in terms of wicks. Actually, that I could do it with the other way in terms of just using wicks. I probably should actually. You can see how there's a confusion in terms of the price action. You might be feeling this yourself with regards to your trading currently, where I'm looking at these body closes in terms of determining divergence. And here I am drawing in Fibonacci's and using the wicks from this low over here in the 5th of September up to our higher wick as we have it actually over here on the 12th of October. Interesting dynamic there for us, making this 376 area be the key for the 236. But let's actually just go ahead and do it from the swing low up to the swing high here, and it's 376.80. It's nominal difference in terms of the actual hard number with this thing, bringing in targets down there towards 344 if we do just go for a golden pocket. Now, if we go for a 786, then what it means is that we will have done this. We'll have a lower high and potentially a higher low, which makes this a very broad symmetrical triangle. It's a very, very, very crap. There you go. So there's your symmetrical triangle for you, bud. Right, okay. Lols. Going back the way, we're still waiting to see if we've got a full play out in terms of the Maximo. Let me just go back a couple more sections. Bearing in mind that what I said there is accurate, though, even though I was kind of being a bit taking, having a joke with the way how I drew my symmetrical triangle on there. So this should be your full measured move. Now, of course, that brings you up to the greedy zones of 420. 60% of that, let's just get a Fibonacci out so I don't have to measure it with my eyes. I can be a bit more accurate with it and say that this here is going to be 60%. So bring it down to about there. Get rid of that Fibonacci, so I know you've measured this 60%. Well, how does that line up with our pricing? Oh, wow, we've already done it, right? I mean, it's kind of obvious, wasn't it? I think we knew where that story was headed, didn't we? So we've done that now. We've done that measured move. So if you want, we could kind of just ignore these things for now. So I will hide them. I'll leave these intermediate pattern things on here. I'll just hide this measuring stick. Don't need that. I'll remove it. In fact, I don't need this measuring stick here either. Oops. Wrong one. Remove that measuring stick there, and I'll hide this because I can always put this back on again if I want to see it at a later date. And instead, let me just get rid of a couple more of these as well. So that's really kind of where we find ourselves. And will we go into some sort of long-term zone like this? Now, I don't feel like this is the most likely resolution to where we are right now. So instead, I'd be looking out to see how we actually handle these areas should we come down and retrace past them. Now, let's bear in mind to be very, very clear that we've not actually taken out the 236 as yet. We've just come in here so far and found it operating in terms of support. Equally as well, the 382 here, having moved past the 236 from the movements down from the highs over here on the 1st of September to the lows over here in the 5th of September. So having come up past the the 236 in here at 351. Now, of course, we're still on for a positive stance. We came up and we didn't actually quite get a full 50% retraced in there. But I'd say that whatever it was, what did we get up to? 397, 397.40 or something like that. 397. That's close enough to 400 for me to feel, satisfied by that being, close enough. Especially since the sort of the sensible amongst you wouldn't have just been putting your orders in to sell in terms of longs at the round number of 400 because crazy, right? Instead, you'd be looking at these things. So that, well, let's call that close enough is close enough, right? And that's how you can justify using that phrase. If you're ever wondered about, how come you can say that on some things and you can't on others? Well, there you go. There's one of the sort of the approaches to that. And that's where we find ourselves just now. Then, of course, remaining above this zone, having not quite hit that, meaning that we haven't quite taken out the 236 over here. You can see the correlation between these things whenever you kind of get used to lining them up and looking at them. So we're waiting here to see, will we actually achieve that or not? Currently, we're on our way towards doing that, of course, as we have already wicked down below it, but we haven't closed down below that. And if we did in a sort of bigger term time frame, then maybe it would be different. But this wick that we had earlier on down to below the 236 wasn't even a 4-hour candle close or anything like that. I don't know if we even got any of them. We're just looking at, yeah, exactly. You're talking like, what did we get here in terms of closes? Let me just zoom right back out again. Come on. Yeah, we got a 15-minute close, but we didn't even get a 15-minute open and close. We had a 15-minute close and a 15-minute open, but then it popped right back up again. So you're talking like very, very, very low-term time frames have actually gone down below there. Let's see if we get something more solid than that to operate off the back of. I've already discussed enough about the divergences and everything in terms of the actual, decent chart to look at over the last ages as we've been doing this and just including this episode alone. So don't need to go on about that. Where we find ourselves in terms of this pitchfork, well, don't tell me that it's crap pitchfork ever, because look at this. Obviously it works fine with us in terms of being able to determine our profit taking targets. Of course, you could have been taking your profits in at sort of the 380s or the 390 area. We did speak about 390 and the importance of it, of course we did, and all of that, but there you go. Now we find ourselves dropping back down below this key line here of sort of 382 where I have this fuzzy grey line at. Will we come back down and retest these zones? If we did, we're looking down to 330, right? But if we don't and we push on, because this could just simply be a healthy, looking at the 1 hour time frame sort of thing, a healthy movement back down the way, having had as part of this overall trend. Sure, possibly. I'd like to then highlight once again, the divergence, which is quite clear here at this point here, where we had this high, and this point here where we had this high, and of course that also is on the DMI over here as well. So you can see all of that for yourself. Obviously I'm scribbling over it just for the memes of the thing, but it's quite obvious. Only complete noobs would think, what are you doing, Rocky? I can't see what you're doing. And you're not a noob. So cool, nice one. The VPVR saying to us if we don't get supported here, then obviously there's a drop off before we come back in again. We can ask questions at 350. We've already covered all that numbers in the other story. In terms of the Bitcoin pair that we're looking at here, and we can obviously say the same thing with regards to the dollar. Obviously this key area, will it operate as support given the structure of things over here? We know the story with regards to the 236 Fibonacci retracement. Of course I could draw that back in again for us to see and look right on it. Actually we're ever slightly below it right now, but if we're going to look past this zone and ask for a movement down here where it could be faking out past it, then that's where you're looking to. And will we see that happen or not? Making our key areas, of course, remaining above 33, 0.033 with this one. We know that 34, we didn't quite get as high as 34. We got up to 33.79. Pretty good, but not the full banana. Divergence is still there, of course it is, on those time frames, on the 12-hour time frame. Then, of course, as well, do we have this story of the hidden bearish divergence? And ding dong dang dong, yes we do, sir. So all of that's the case as well. This wedge here having not really managed to fulfill its promise, but sure, that's okay so far for now. Let's see if we actually do, or if we're able to move outside of any sort of grey areas. It's unfair to say that there's a wedge here, But we could look at this area of price action and say that any movements down past this zone, which simply put in a higher low, could be looked at as like an ascending wedge, of course, which would be a bullish pattern and would fill out the rest of that measured move for this thing. Certainly, at least in terms of the textbook, in terms of getting 60%, and you'd be looking at around about, well, about here, which would be obviously taking out the 236 Fibonacci. Oops, it's on the right-hand side now. Taking out that 236 and Fibonacci, invalidating it and giving us potential to move towards the top side. But everything's more or less the same. We've covered it all in detail for us. I'm going to move on to do the other coins just now. Thanks so much for tuning in. I've been Rocky Outcrop. I'll be Rocky Outcrop when I come back tomorrow as well. So make sure to tell your friends, youtube.com/Rocky Outcrop for the very best in technical analysis on the interwebs. And I'll see you then. Thanks so much. Join the Discord if you want to. Hit that join button if you want to send some value back my direction. I'd really appreciate it. Obviously, I put out extreme amounts of value every day, but not everybody can afford to do that. If you hit the subscribe button, then of course I appreciate your contribution to the growth of this channel. See you next time. Down, down, down.